Not just the moon, the supermoon.
Welcome back to another This Week in Crypto. We're here with Elena Obukhova. Super excited to talk to you again. I saw that you went to the Security Token Summit and the mayor, Eric Adams, was there and he's getting paid or has asked to be paid in Bitcoin. Do you have any thoughts on that?
Hello, everyone. Yeah, Security Token Summit was quite an amazing event. I was very impressed by people who actually attended the summit. There were lots of government officials, government of El Salvador, and of course, New York City Mayor Eric Adams was there. He started an opening ceremony, and what you mentioned, he is asking people to pay him in Bitcoin, but the truth is, the whole payroll system is not designed to pay anyone in crypto. So what they're actually doing, but people who are supposed to pay him a salary in the payroll department, they're getting fiat. Then they have to go through lots of procedure to change this fiat into crypto, into Bitcoin, in order to pay him. So I heard some gossips from the department where people are like kind of hating him for that. I'm just kidding, but yeah, because payroll system is just not designed for paying anyone in Bitcoin. So they have to go through extra hustle.
Yeah, so he wants Bitcoin, but he may not be making friends by asking for it at this point in time.
Yeah, and it's like it's also like really funny because New York is the worst place to run your crypto project. Maybe like one of the worst place for sure, not maybe the worst, but one of because of tightened regulations. If you're trying to get a crypto license, just forget about it. Even big companies are, even big crypto companies are struggling to actually start getting their license.
Was there any other regulation news that you heard during that talk?
There were a lot of discussions, and it was very interesting to hear from people working in DC in the regulations department. They were bringing up conversations that we need to have some change. I was speaking in a panel, and I was talking on democratization in the field of tokenized assets and how we actually not democratizing anything. We were all trying to make it easier for businesses to tokenize assets. We tried to make it easier in the financial sector, in the real estate sector. But the truth is, with all the regulatory frameworks that exist right now and in United States and in other countries, we did it quite complicated. And before we had a middleman for all the paperwork, you needed to hire a lawyer, auditor, or any other person that you were supposed to have by law in order to proceed, let's say, with a real estate deal. So when we're tokenizing an asset, right now through blockchain and using blockchain to, for example, sell real estate, yes, we do remove a middleman on the transaction side, but we still have to hire lawyers in order to tokenize an asset. We have to understand the framework. We have to go and maybe pay sometimes bigger fees in order to tokenize an asset. So we're not really changing anything. We just we're changing steps, how it's supposed to work, but we're not simplifying, we're not democratizing it. We simplifying transactions, but it's not affordable, it's not accessible to other businesses. And unfortunately, there were lots of discussions on regulations. I was shocked that some people are saying we need better regulations. When I'm saying we don't need regulations. We have blockchain to regulate transactions. We need to educate people to learn how not to be scammed, how to do their own research. Why are we trying to hide again behind some institutions, corporations, when it's when it should be coming from another angle. And the funniest thing, we did so many changes in the financial industry, in the real estate industry, and any other like tech segments that they have in the market. But what never changed is education. We're still using very outdated resources to explain people how it's supposed to work. We're still learning some methodologies, or even on financial markets, or that are not even applicable. I don't know, like if you're familiar with, for example, Black-Scholes model for option pricing. It's still being taught in universities when there were already way more advanced methodologies and advanced versions of like option pricing models. If we're talking even about like traditional finance, just one of the examples. And the same with regulations. We don't really need them. We need to start educating people. We need to explain how it's supposed to work. And I was raising this question. I was saying that if you talk to even bankers, if you talk to big banks and ask them how do they feel about regulations, oh, they are not happy. They are saying that their biggest challenge is a regulatory framework. Of course, they also are limited in terms of what they can invest in, how fast they can move with new technologies, and how they can utilize, for example, even cryptocurrency-related assets. And I talk also to several bankers from Goldman Sachs, from JP Morgan during that summit, and all of them were very frustrated with current regulations. So yeah, there were discussions, but I think it's not enough. No one is saying that we actually don't need, like the current system does work, the current regulatory system does work. We need to come up with a better way we can protect people.
Yeah, whenever you kind of talk about this, I believe education is really important, but it also makes me weary about like what people are learning in college and universities. Kind of outdated by the time you get out. So
I don't think they're learning anything. I think they're totally unprepared for a real world. I was watching like several videos. Maybe next time we can find and pull them up as well. But I saw what kind of questions students are asking and what kind of things they believe in. It's completely, totally wrong. They're so disconnected. They don't understand how people, how actual markets are operating, how business side works, how regulation system works. They have not a single idea. They're just studying by books. They're believing textbooks. Professors, many professors are just there to teach. They're not actively involved in the space. That should be changed as well. People are not prepared.
Yeah, I think so. So before we get into some of the other questions, let's talk about the Supermoon camp coming up in Austin. Is there any other updates? Because last week we kind of started with, the parties, and I want to know if there's anything that has changed or anything that's coming up for Supermoon in Austin.
We're all excited for Austin for sure. We started getting lots of people registering for our mention party. We expect to have a very a high quality and fun event at the same time. We will have our people from major blockchain companies, crypto projects, DeFi, Web3, have lots of VCs participating. I expect Austin to be a very interesting event in general, because I know that during the pandemic, and considering what I mentioned at the very beginning, that New York City tightened regulations, it became an awful place to run your crypto business, to establish your crypto business in the United States, of course, again, because of these regulations. And lots of people and businesses started moving where? To Austin, because Texas Texas was ready. Texas was crypto friendly and is crypto friendly. So we saw a huge growth of a community there. And it actually will be my first time in Texas and Austin. So I'm very excited because I heard so much good things about Austin and Texas in general. Also met very interesting projects that are doing tokenizations that are based in Austin, and lots of Web3 companies as well. So we're definitely ready. Supermoon Camp Austin will be something special. We'll be exploring opportunities there, and at the same time enjoying a really great, big, and fun event.
Yeah, I noticed in the last year, so many comedians moved down to Austin, Texas. Obviously, I think because, Joe Rogan, like the biggest podcaster, moved down to Texas. But all the other comedians moved down there, and it's now become like a hot spot for comedy. So, that's kind of one of the reasons why I'm keeping an eye on Austin, Texas. All the funny people have moved down there.
I think, it sounds really fun. Like, whenever I meet people living in Austin, it's a completely different vibe. So very looking forward to see how it is in real life. Also, New York City is coming back to life. There are way more events happening. We're right now entering spring, summer. So obviously it got warmer. People want to get out. So we're also seeing lots of crypto and non-crypto events happening here.
New York is always kind of like the hot spot. I was keen to keep tabs on what's going on there. So I want to kind of jump into the questions that I have for this week. And the first topic I want to talk about made me laugh, but it also was, it's kind of made me feel bad. So the price of, two popular cryptocurrencies, we talked about this last week, Luna and Terra crashed, wiping out $40 billion. And Mike Novogratz, the CEO of Galaxy Digital, was one of the top promoters of both of those cryptocurrencies. And he even got a tattoo on his arm in January of a wolf howling at the moon with the tag Luna. And that's the part that made me laugh, because I thought, obviously, this was a very permanent decision, okay? And then when the crash happened, he kind of went quiet and then later tweeted that it was a big idea that failed. So I wanted to just say to anybody listening, don't get a cryptocurrency tattoo, first of all. Maybe not the best idea. But how do you think that supporters of cryptocurrency should respond in a situation like this? And do you have any thoughts on that overall situation?
I mean, totally agree that you shouldn't get a tattoo, and I will extend it to any other projects, not about even crypto. Considering the market situation and stats, 95% of projects fail. So you don't really want to have something on your body forever that has a 95% probability to fail. But talking about crypto market, and we discussed it last time. Welcome everyone to watch our previous week discussion on bubbles, and we're not talking only about crypto bubbles, but tech boom that was happening before. And I was already mentioning that, of course, when we have a hype on the market, people jumping on board, people want to seize an opportunity, get quick earnings, and there are, of course, more projects appearing on the market. And with our cryptocurrency, it became so easy to launch your own crypto, your own Web3 project or DeFi. So of course we have people not only trying to seize an opportunity in terms of investing, but a lot of people trying to seize an opportunity to build a project or to scam people. I mean, that's unfortunately how the markets work and how human nature works. So it will be hard to change. And it's not about cryptocurrency. It's about any other industry. It's just our human nature. You can put whatever other industry term in front of it, but it's still a human nature. And of course, with cryptocurrency right now, I told before when I went to Bitcoin 2022 in Miami, just I believe it was last month. I'm already lost in time when it was, but I believe it was April. And Bitcoin 2022 gathered 30,000 people. And I was doing a bunch of interviews at the conference. And majority of people who joined the space within like last year or half a year, they don't really have our same beliefs as people who joined in 2014 as me, people who joined a bit later during 2017, 18. We're believing in decentralization, in changing financial system, and we're believing in cryptocurrencies in general. Those people, majority, don't get me wrong, there are a lot of people, of course, sharing same beliefs, but there was a good number of people who just want to see the quick opportunities. They see there are lots of money in the crypto space. Bitcoin is growing. Other cryptocurrencies are growing. They're joining on board. They want to get bigger salaries. It's also became easier for people to change their position from, let's say, a traditional corporation. They were just a general, maybe manager or general marketer. They jump into a crypto space. They can have a higher opportunity to become a CMO, to become at a higher position. So crypto gave this opportunity to lots of people, and of course they're willing to change their industries. And having said that, we now entering a correction state. We enter the correction state, and this will be a time when there will be adverse selection. We're gonna get rid of everyone who just jumped and saw that it's gonna continue. It's always gonna be positive. We're gonna always have lots of money. These people who jumped at their all-time high are people who wanted to go immediately to a moon without any challenges, any problems. Gonna be sorted out. All these kind of projects, lots of scams, will leave the market. And that's what I call adverse selection. We have it in nature. We have it in any other industry. And of course, you have to experience, you have to go through correction to truly believe and truly understand what is the utility. Why are you in this industry? If you're here for quick money, probably you're going to leave. If you're here with a vision, with a mission to change financial system, to build a project for masses, for people who don't have access to resources, or who are believing in decentralization, you will stay, because you're not here for a quick game. You're here for a longer game, and yeah, that's what's happening.
Yeah, so just like in the real world, how long did it take for us to get to the moon? It's kind of like the same thing. It takes a while.
Yeah.
Not like all of a sudden somebody makes a rocket and you get to the moon right away.
Exactly. We still can go to the moon.
So
just us, just people.
Yeah.
If you're not a billionaire.
It's just going to take a little bit.
If you're a billionaire, it's easier. But yeah.
Yeah. Just depends, I guess. So next, I wanted to touch on maybe a similarity, or maybe your thoughts on similarities. Because I saw for Canada on Wednesday, inflation hit a 31-year high. So it rose fastest it has in a while, and then in the past 40 years in the US and the UK, prices have risen very fast. And so the Federal Reserve recently hiked its benchmark interest rate by 0.5%, and it's expected to do so again in June and July. The last time rate hikes came so quickly was in the year 2000, which was the year of the dotcom crash. So I kind of just wanted to see if you saw any similarities between, 2000 dot-com crash and maybe what's happening now, as there's a lot of Web3 hype. I think there's a lot of people that might not really understand what's happening. So what kind of similarities might you see?
It's kind of related to what we were discussing last time about the bubbles and correction. And I was mentioning the market cycle. when you have people with private information or even insider information who joining on the board early and getting like all the largest returns and outcome from any trend on the market because they know what's coming, or they're making it to happen. They are the ones who are setting a trend. Then we have there are like people related to them who are jumping right after. Then investors are people who are doing extensive research and also understanding a clear situation on the market. And then we have everyone else joining on the game. That's when we have our bubble exploding. So it's very similar that happened in 2000s. And another thing that I briefly mentioned, it's that it became so easy to launch a project, and IPOs were way easier at that moment. So lots of projects were able to go IPO without like having any specific business plan. You just you're jumping, doing IPO, and enjoying your return. It's not really different from what was happening during ICO. The only problems that I see here is that we didn't really learn from that lesson. What the government decided to do is that, we need to protect people. We need to set up some complicated regulatory framework to stop it from happening. So companies will have to reach certain maturity in terms of their attraction, revenue, their size in order to participate in the IPO. Like if other people, smaller companies, have no opportunity and no need in gaining additional capital from retail investors, the government decided that retail investors are uneducated. They decided that they are like uneducated, and I'm not talking about formal education, that they didn't do their research, they don't understand what's going on. And I don't want to use the word stupid, but I feel that's how regulators are seeing all retail investors and people who are investing in stocks at the public market. And that's not true. Everyone is able to do their research. We're living in the era when internet is accessible. You can read whatever information is available to you. You can understand, you can compare by yourself. You don't need someone to protect you. What they're doing, they're creating limits for just a general audience to enter and participate in opportunity. And I was already saying that we're lacking good education, because if people understand how to do it, if they have access to all information, they can do their own decisions. They don't need someone to tell them that they can't do it because it's too complicated. It's like if someone asking me, hey, Elena, can you explain me what Bitcoin is? And I'm just looking at this person saying, oh, no, I think it's too complicated for you. I don't think you should know about it. That's the same as what they're doing. I don't see any difference. It's like if other people saying, hey, we want to participate in the stock investing. We're very interested. There are lots of students that are majored in a quant finance background. They can do their own research, but somehow many of them until now had access to this opportunity. Then we had, of course, Robinhood, other platforms are making investing in stocks easier, more accessible to just a general audience. But at the same time, we're not educating. And when there is a hype and craze going on the market, the government jumping in the game and saying, okay, we need to stop the trading because market is going crazy. It's super volatile. Maybe to prevent this situation to happen, we need to have more transparency, more information, and explaining people how the whole process is working, just to put information out there. People are capable and willing to learn, more than capable to learn. And the same with the crypto markets. We had, so IPO now is something inaccessible. It's very hard to go for IPO. You have to reach a certain maturity. You also have to go to investment banks. how convenient for them. You have to go to investment banks, you have to have an underwriter in order to apply for IPO, you have to be audited, you have to go through all this process. How convenient for big institutions and corporations. It's just cash brought to them by all these regulations. And of course, smaller businesses, they cannot go through this opportunity. We started seeing crowdfunding platforms that are democratizing access to financing, especially for projects that are not just trying to raise money, but they want to have their investors as the stakeholders and as their users. That's the best what you can do if you're running a customer-focused startup. You're crowdfunding. So every single person who maybe invested, let's say, $50 amount in your project, they will be more loyal to you because they put money. They want you to succeed. They want to be using your platforms. They want to be they're going to be referring it to all their friends. And that's how you're also growing your user base. So that's why crowdfunding is actually amazing fundraising method for lots of startups. And then we had the ICO. ICOs, I mean, majority of them, not majority, I don't want to be that pessimistic and bad, but a good number of them were scams. Again, because of human nature. But lots of projects wanted to have a quicker access to financing without bringing institutions to a game. Was just giving an opportunity to retail investors to participate. And that's their big similarity. IPOs also started in a more democratized way. People were able to participate. It's just technology-wise, it was still harder. We were just starting an internet era. It wasn't as simple as instantaneous as it is now. Now every single person can go online, especially in United States. We can access crowdfunding platforms, DeFi, any crypto investment tools easily without any restrictions and complications. And the government sees it, and there's something going on. People again, they found a loophole. They're again throwing their money into some projects, and the institutions are not earning anything. Their taxes are not going to a government as well, because right now everything in crypto, no one is cashing out, so no one is paying their any taxes on their financial gains. So government is outrageous. They're jumping in. They're saying guys, no, that's not supposed to work like that. Let us introduce a new regulatory framework that will help to protect people from scams. That's a very similar story, right, as we had in 2000s. And I don't want to be always so negative and saying so many bad things, but unfortunately, that's how the system works. And until we start realizing that we need to change it, we don't need to add more complications and steps in the middle. We need to make it accessible to majority of people. We're getting more educated every day because of access to internet and information. Now, people who before maybe had a zero financial knowledge can learn it within a few days. They can start already understanding the basics of investments through YouTube channels, through different other courses available on the internet, or just simply through trying it. You don't need to go to a library, look for some book, have a subscription. This book will only be available in the big cities, or you need to have a fancy degree. No, you don't need to have it. Every person has access to information. So yeah, I see lots of similarities. We just need to find a way how it's going to work in the modern community society. And I was really happy by these topics are being brought by major lawyers that are working in DC on the regulationary side, that are advising how to sustain and operate your business in the current environment. And yeah, so I do think we always going through the same cycle, because people are looking for a loophole to get access to financing.
Yeah, it kind of just sounds a little condescending from like their part, right? Like, oh, don't worry about it. You're not going to get it anyway. And it's kind of like, what? I've noticed that there was a podcast that started, I think, a year ago that I started listening to, and they were covering investment, and that's basically their whole premise was like it's not actually that hard to learn. There's a lot of lingo that goes on and a lot of like tactics that try to make you think like it's too hard to learn, but it's not. And it grew rather quickly because they wanted to kind of teach people and not gatekeep that. So I think that that's what it is. There's just a lot of gatekeeping going on because for some reason they want you to think that it's too hard. But yeah, I agree.
Instead of explain, they're just lazy to explain. You know, like, have you ever had like a friend annoying you with a bunch of questions and you're just saying, oh, I will explain later, or like, it's too complicated. You just don't want to waste your time, right? For some reason. And that's, I feel that's what they're trying to do. They feel like, oh, it's a annoying crowd of people like willing to get financing. Oh no, they shouldn't do it. They have too little money. They're not as rich as we are. They shouldn't probably even bother trying when it's actually not correct. And what they're advising everyone is how to save, right? Learn how to save. Why are they creating inflation? Just increasing all the prices, and instead of explaining how to invest and how to get more money, their advice is how can you save money? That's ridiculous.
Yes, so yeah, that's one of the things that I learned when I started actually like diving into financial education and like reading all of the books. Everything that I thought before that I was taught from, well, we don't really have a lot of financial education in school, but everything that I grew up with, I was like, oh, okay, so everything was completely wrong. But yeah. So another story in the news, and I thought this was interesting because when we shared the article, you said some of the things in the article were that they were kind of like ridiculous. So last week, federal prosecutors arrested a 50-year-old Long Island man and accused him of defrauding hundreds of investors by offering large gains of 5% per week from a fictional trading platform. Eddie Alexander allegedly induced his clients to invest over $59 million with promises of huge passive income returns. Damian Williams, the U.S. Attorney for the Southern District of New York, announced in reality no such technology existed, as Alexandra is alleged to have invested very little of their money. Most was lost, and he actually transferred most to personal accounts in order to buy luxury items. So then there was a lot of other talk in that article. I think it was from the New Yorker about scams that are happening and social media scams. And so what do you think happened there, kind of first off with that fictional currency?
That's actually a really interesting article. Let me try to bring it up here. Because, yeah, you were sharing it with me, and yeah, I wanted to share it with people. Yeah, here we go, right? It's a great crypto grief, maybe unbinding. First of all, I want to say crypto scams is something that exists. It happens pretty often. Same way as any other scams, Ponzi schemes. People are bringing money in. They hear, oh, 5% weekly return. Yes, for sure. That's a perfect investment opportunity. I'm going to get rich. I don't even need to do any background check, any research. To remember Barney Madoff, he scammed so many people in the financial industry that know what they're talking about. They're working in this field, and they didn't do much of background checking. So Ponzi schemes, crypto scams, other financial scams, it's something that exists all the time. And again, it's just going back to our good conversation about human nature, right? We hear 5% weekly return, we're like, oh no, how can it be a risk? Like, I know this person, I met him like there, or like he's participating in different events. He's a famous person, he's not gonna scam me. Yes, he can. You hear 5% weekly return, you do your checking. And I was going through this article, and I also saw this. This was quite ridiculous for me to see, like five top crypto scams to watch in 2022. So there is a US news that actually explaining you some crypto scams to follow in 2022. It just was a very different wording for me. It's usually, you see it when someone is preparing an article on a top five, I don't know, exciting tech innovations. Yeah, here we're talking about scams. And we have, I really recommend to read through, try to understand a bit more about just different Ponzi schemes, scams. It's a part of education. It's a part of you learning how to protect yourself, how to do research later on in order not to be scammed. Read financial history. I personally really enjoyed reading about different bubbles and trying to understand. They also came up with quite cool names, right? Pig butchering crypto scam. And yeah, this for me was really, really funny. But another thing that I saw in an article is, I believe in some sections they were talking about Bitcoin. Let me quickly find it. So yeah, they were hiding it somewhere.
Yeah, I thought that pig butchering, I read that too, and I was like, what is this? So apparently it's like an attractive person will try to seduce you into giving them your cryptocurrency. That's what it is. But it's just such a weird name for it.
I mean, it's like honeypotting, right? I mean, they could use a better word for that. But yeah, I mean, it's pretty. It's pretty often when you're getting investment advice, people are judging. I mean, as long as we're trying to be tolerant, like very wise about every single situation, people are judging you by how you look, how you dress. If you're like all dressed like an expensive suit, you have expensive watch, people would assume, okay, you're probably doing well. It's not exactly right. If you guys are visiting any crypto conference, you will see whales wearing flip-flops and shorts because they don't care. And lots of billionaires, if you see billionaires, and yeah, New York, New York is going loud. It's a holiday. If you look at billionaires, majority of them are dressed pretty modest. And here, what I wanted also to pay attention to, I was really laughing about this part, about Bitcoin being used by drug dealers and extortionists. That is, have been New Yorkers saying that the fact that drug dealers and extortionists have long been among the most enthusiastic adopters of Bitcoin. So no one is talking about cash, right? I was really talking that cryptocurrency are transparent. It's so easy to find drug dealers using crypto. Is using Bitcoin, especially Bitcoin. You can check transaction. You can see what wallet they were sent, from which wallet transactions were made. You can trace it so easily. So I can't really imagine the criminals, very like sophisticated criminals doing operations through Bitcoin. Yes, it can happen on a smaller scale. The easier way for them to do and always was to do through cash. They can use art. They can use other expensive goods. And instead of bringing a truck full of cash and cash bills, that obviously easier to notice, you can move one or two paintings. It doesn't take that much space, and that was also using for lots of crimes. So, but no one is talking about it, right? New Yorker and all traditional media want us to think that cryptocurrencies are dirty and being used for illegal transactions, when majority of them are being used in a developing economies for people to get access to basic financing. No one is talking about it. I've never seen it being covered by traditional media. They really like saying how someone is doing illegal transactions. So yeah, that's where we are.
Yeah, they do. For some reason, they like saying that a lot. I wanted to also ask about Michael Saylor. So I've been watching him on YouTube. I feel like he's everywhere. He's been doing a lot of interviews. And each one of his interviews, he says that Bitcoin is like energy, and he wants people to start thinking about it in that way. And I had two questions here. So I noticed that as crypto stocks were rising, like other stocks were going down in price, and then now that there's kind of like been an adjustment, that's equaled out. And on the other side of that, Michael Saylor has a whole bunch of Bitcoin. So does that mean he would be like hoarding energy? And my question to you would be, do you feel like he's accurate in saying Bitcoin is like a type of energy? And, what do you think about that?
Bitcoin definitely uses energy. And I was briefly mentioning in some of my talks as well how not cryptocurrency, but proof of work blockchains, and in this case we're talking about Bitcoin, is the only industry that is actually pushing for innovations in the green energy sector. Bitcoin mining is very expensive. It spends so much energy on mining. And there will be, of course, like all the miners will be the people who will try to find a way how we can minimize an energy consumption, how we can utilize the green energy sources in order to do mining, because no one wants to pay their electricity bills. So I'm not sure what Saylor is mentioning when talking about energy. I mean, exactly. I cannot read his mind, but I would say that Bitcoin is pushing for innovations in the green energy sector. That industry didn't have much of things going on. We were all talking about environment, but if we look, who's talking about environment? Students, younger generations, Gen Z, they're also environmentally friendly. They're not changing anything. If you look in New York, you will be like handed so much of plastic waste daily. Recycling system works poorly. Energy consumption is still very large. If you look in Asia, ACs will be everywhere, even in outdoor spaces. So everyone is wasting lots of energy. Everyone is only like talking like blah, blah. We need to protect environment. We need to think about green energy sources. But really little like number of companies and people actually trying to do some change. And here comes miners. They're saying, no, guys, like we can't operate this way. We're spending so much money on our electricity. We can't afford it. We want to make sure we earn more money with less money spent. So they're coming in the game and they're saying, okay, let's figure out a way how we can use green energy for mining and how we can optimize the green energy so we can use alternative sources more. We can have a easier access, faster connection to our green energy sources in order to do mining. So I do think crypto and especially again Bitcoin and proof of work blockchains are the ones that are strongly and directly connected to energy sector, because they're the ones that are reshaping that industry, and that also, of course, traditional media will never cover. Right? They want you to think that Bitcoin is environmentally unfriendly. That is totally wrong.
Yeah, I was trying to think of like what he was talking about, and my thoughts were maybe more like metaphorical, like, you know how people that have like millions of dollars of fiat or billions of dollars, billionaires can do a lot more, and it goes farther. With Bitcoin, people that have a lot of Bitcoin, maybe that can allow them to have, more energy or to do more stuff in the physical world or in the digital world, or it'll work for them in some way. But I really didn't understand it myself, so
I think it's a
I'm
beautiful
gonna have
idea.
to yeah.
That we can do more with Bitcoin. I mean, obviously, we are getting more freedom in the financial sector because no one can affect you. None of regulators can tell you what to do if you are disconnected from a system. What will they say? Oh, we will ban your bank accounts. Well, yeah, like go ahead. I don't have money there. I have everything in Bitcoin. Right. So yeah, it can be right.
Yeah, in other news, both Instagram and Spotify started testing NFTs on their platforms. And so I thought that was kind of exciting that we see larger platforms kind of coming into the NFT space and, taking it more seriously in order to bring it to us. So Instagram kind of called theirs digital collectibles, where creators can connect third-party wallets and share NFTs created from Polygon and Ethereum chains to their feed, to the stories, and through messages. Mark Zuckerberg also discussed plans to bring the same to Facebook in the future, and he also wanted to begin testing augmented reality NFTs. So I want to know if you were kind of excited about the addition of NFTs to those larger platforms, and what use cases you might see for augmented reality NFTs.
I'm always excited to hear that more people will be joining the space, always, even if it's a sort of centralized platform. And whoever says like, okay, all this Instagram, Facebook, it's evil. They're all like big corporations, institutions. We're still using them on a daily basis, right? All these people are. Let's say I find it a bit hypocritical. Like we're all saying, "Oh no, we hate corporations. We hate these institutions. They're restricting freedom of speech." And then like, "Oh, how do I connect with you? Oh, here's my Instagram." So yeah, I mean, guys, if we were trying to do something, yeah, we need to also find out a way how we whether use other platforms or just trying to explain ourselves in a different manner. So of course it's cool because more people will be exposed to NFTs and crypto. They will learn it definitely in an easier way. Because I can't imagine Instagram, Facebook, Spotify, like with all the cash that they have on their account, not to be able to afford a good UX designer and UX consultant who can make a flow work smoother for just a general audience. So for sure, we will have people learning about NFTs in an easier and simpler way. And I was keep repeating it. Our goal is to explain to these people what NFTs are about and that they can be decentralized if you take them outside of the platform and learn how to use them, learn how to store them, learn how to use MetaMask. I think that's our mission. People who are working in the crypto and Web3 space, who are deeply involved in this space, we need to explain to newcomers what what are they getting themselves into. And in terms of AI, yeah, there are so many applications already in the digital art space. I know artists from XRE, for example, they're using augmented reality for their art installations. So you can look at the map, and there will be different locations in New York City where you can come and you can access the digital art with your phone. So it's one of their use cases, but NFTs are making it liquid. So all these digital assets have value, they have timestamp, they can be resold, they can also be placed on a different platform. because once you have something on the blockchain, it's not connected to a certain centralized platform. It's always something you can take with you to any other platform and just keep it forever.
Yeah, I'm excited about the AR NFTs. I kind of want to see how far that goes. I'm excited to see things maybe 20 years down the road, even though I know that's far away for people to kind of think about.
Yeah, everything changing in in a year, right? We're not even building roadmaps anymore for like 5 years. Traditional sector, people saying, okay, we need to have a plan for next 5 to 10 years. In crypto, okay, let's plan for next year and see how it goes from there. Let's be ready to for anything. Whatever new thing appears, we're there.
Yeah, that's true, because everything does change so fast as well. Also, according to the Wall Street Journal, when we're talking about NFTs here, it said the number of NFTs sold daily has fallen by 92%, from 225,000 in September to 19,000 now, which, it's daily. So do you think NFT market is kind of like a horseshoe, maybe, where we had a lot of people selling, now it's kind of gone down, and it will even out as there's more kind of like real world or even like game-like applications that are coming into NFTs?
For sure. We are at the correction stage. Again, we're sorting out, we have adverse selection, right? We're sorting out scams, projects without utility, without any value for society, for community. And there are more projects entering with more matured ideas, understanding how NFT technology can be used for different industries, real life applications, and how it can help their target audience. So we see real estate, we have, of course, metaverse, we have NFTs being used for communities. And that's what we are doing at the Supermoon Camp. We're introducing our NFT memberships, through which people will be able to get access to our network, to our community. They will be able to participate in different clubs, undertake leadership roles, create their own events by using community resources, participate in research opportunities, interviews, this podcast on Supermoon Station, and get access to grant opportunities and other business connections. So this NFT is essentially your key to that community and the community resources. So there is a different utility, and it's just easier to manage this community because you don't need to have one platform. So if something happens to, let's say, Discord or any other centralized app, you can quickly move your community somewhere else because your master key is recorded on a blockchain.
That sounds awesome. When you listed all the stuff for Supermoon, I was like, that is awesome. There's so much more than I initially thought that there was being offered to community members. That's really cool.
And there will be Supermoon Academy coming. It will be announced a little bit later, but we have our Supermoon Academy on the roadmap. And actually, our roadmap will be released very soon. Hopefully next week, we will have a public announcement of our all plans with Supermoon memberships and with our roadmap, so people will be able to see news about Supermoon, Supermoon Academy, and Supermoon Foundation as well.
Awesome. Yeah, I'm super excited for that. My last question today, I kind of snuck it in here, was, again, it's about music NFTs. So that's really where I started realizing that I think NFTs can be a game changer for a lot of different industries. And over the last week, I noticed that a few of these music NFT platforms started offering splits where collaborators can have it just obviously written in the smart contract, different royalty percentages, and it kind of takes away any difficulties when creating that contract or cementing that contract, I would say, because now it's already there and you know what's happening. And so automatically through these collaborations, people will just receive their royalties. And I thought about people that make beats, like how even it niches down into like smaller sections, so where beat makers will have more opportunities to receive those royalty percentages through NFTs. So my question was, do you think that section, music NFTs or maybe another NFT niche, is really where we're going to see a wider audience realize and recognize the value of NFTs?
I think it's definitely one of the bigger use cases. I don't think it's the industry that's gonna make people realize. But what you mentioned with royalties, it's of course a game changer. And we already discussed previously how traditional music industry has entry barriers, how there are a bunch of deals being signed on a daily basis that are not beneficial for an artist. Artists sometimes not even getting royalties that they were supposed to. So there is a lot of unfairness in the music industry, and NFTs are definitely trying to solve this problem. But we still have problems with accessing, not the problems, but challenges in accessing community, building your building relationships with your audience, finding a way how you're going to reach them. That's also like you need marketing, you need to understand how to promote yourself. But I think that NFT is a tool that brings you collaboration opportunities. And that, for example, what we're trying to bring to our market with Flashback. So we introduced our so-called joint loyalty programs or joint memberships. So now different business owners can partner up and issue their joint loyalty program. Let's say a coffee shop can reach out to a restaurant, to event organizer. They can even start collaborating with artists, with music artists, and join form a loyalty program that their audience will be able to access. And within this loyalty programs, there might be different opportunities at a single location, as well as the missions that their audience need to accomplish in order to unlock their benefits. And same for memberships. Now at the Flashback, you will be able to form joint memberships, and you can also support artists. So Broadway was for us a very big use case. We're still trying to figure out how it's supposed to work, but what Broadway mentioned to us, artists are pushing for innovations. Broadway theaters, they have people in charge who are a little bit disconnected from the technology sector, and of course it's understandable. They're in a completely different industry. They are experts in theaters, in all these art-related activities and performance that we see at the Broadway shows. They know how to produce it. They use a ticket provider that they already learned, and they will be using this ticket provider as long as it satisfies their basic needs. They don't want to change it because it's complicated, it's time consuming. And now when you're buying a Broadway ticket, you're coming to watch some Broadway show, you learn about artists from a paper that someone gives you. And how many of us really are looking at the paper and really taking them with us? Not that many. Everyone is annoyed with the paper materials. Everyone forgets them somewhere. You lose them because everything you already use it, everything is on your phone. And now you don't know who was performing at the show, and artists have no means of connecting with you because they also didn't get this data. But now at the Flashback, you can form a community of people who were attending certain show. You can share information about artists who were performing. And artists can send custom invitations to everyone who visited a certain Broadway show, inviting them to their separate cabaret or their separate show. So now artists getting access to their audience. At the same time, if you have a celebrity artist, or you can also negotiate a deal to include the royalties in these tickets. So whenever there is a transactional side that happening, artists can get their additional revenue from there. So of course, we are unlocking more collaborations through NFTs that weren't really available until now. And I think that's a big game changer that not only music industry needs, but lots of other business related industries need, especially if we're talking about artists who now, unfortunately, are disconnected. Many of them are disconnected from their real audience.